Okay, Greg and Sean, can y'all see my screen okay?
Absolutely.
Yes.
Okay, good, good. So we are here to learn about this or chat about this amazing Ichimoku cloud. I am excited to, be delving into this. I hadn't really paid a lot of attention, but as I come to hear more about it and I'm looking at some of these videos and things, I'm seeing how it truly is at a glance. You can make some decisions in this in the market using this tool. So what I want to do to make this really good is based on the two videos that we've been watching so far, team. Let's talk about the components of this cloud. Is my mouse visible on the screen?
Yes.
Okay, good. So I watched the two videos so far, guys, and of course the colors are different, but the indicator is the same in terms of how they are calling them out. So let me go ahead and point, and you guys can jump in at any time, and we could talk about each particular indicator based on what you know. So I'm going to take a stab and say that this center line here, this green one, is the Conjunct Sun Line, TENKAN-SEN. The Conjunct Sun. Would you agree with that?
That's correct.
Okay.
Yes.
Okay.
Turning line.
Yes, Sean, can you tell us what you know about how many periods this represents and what you know about this particular line?
Yes, ma'am. So the Conjunct Sun line is also called a conversion line, and it's supposed to signify 9 periods of the highs and 9 periods of low pricing. Okay. And I want to say it is, let's see, is that divided by half?
Yes.
Yep.
Okay, in regards to that. So that's almost 2 weeks of information that's described with the Conjunct Sun line.
Okay, like a short-term trend line.
Correct.
Okay, great.
Also moving average type line over the 9 periods of the highs and lows.
Okay, nice. Greg, what were you going to say?
That was pretty much it. The conversion line, I've also heard it called the turning line, or that's kind of like one of the symbols or one of the indicators to be able to highlight when a possible pullback you should kind of be alert for. And I think they called it, I saw a simple moving average, and you say 9 days in the past. Basically, that's what it covers.
Nice. And I think something really cool too that I heard was that it can also be used like a support and resistance, I think too, maybe. If you can.
You are correct.
Am I right? Okay. Like here, you can see some slight consolidation, or it's really kind of like a resistance area against these candles for a little while, right?
Yes.
There's that. Okay, good deal. Then if we want to talk about the next one, which is the blue line, if I'm right, this is the Conjunct Sun Line, spelled KINJUN-SEN. This blue one on the top here. All right, it's similar to like a 30-day moving average. What do you guys know about this one? We'll start with you, Sean.
Well, yeah, it kind of can be debated, but of course, because of the origin of why the cloud was made, of course, it was the Chinese rice men back in the day. Their trading days were periodically 26 days of the month versus 30. Here in the United States, we use 30, but by adjusting it to the 26 days, there's not a big variance in that change. And so the Conjunct Sun will go ahead and record the 26-day high and the 26-day low period. So that's what that'll track.
Very nice.
It's also called the baseline also.
Okay, baseline. I'll write that down. I didn't have that down in my notes. Baseline. Okay. All right. Hey, Greg, anything else to add to that from yours?
Nope. I think that bigger trend line. Yeah. Well, I think the only other thing I heard is possibly that it's called the trend line as well.
Okay, baseline trend line. Good deal. Because I do come across instances where different terminologies are used to describe the same thing. So it's good to have that in our arsenal too.
Now, if I may, I'll interject real quick,
Yeah.
just for those who are definitely watching this video and such, that the whole reason why the Ichimoku cloud is so effective and why we're looking at this is because it clearly defines trends. And so we understand that when Adaeze Duncan was talking in our training that the trend is our friend, you want to have a tool that can help you identify the trend, because the higher success of you winning the trade is going to be with the trend, of course. And so, of course, if we're being able to identify a downtrend going short, you will have the higher probability of success by doing sells versus buys, and then vice versa. And so compared to, you can use this, as I was told, you could use it for stocks and futures and cryptocurrencies. You can use it on any time frames, on any products or currencies, or different investments, but is primarily most effective on Forex. And so that's why we're discussing this today.
That's right. Good deal on that. You know, what's really cool, I think, about when you're talking about trends, when these two lines, the Tenkan Sen and the Conjunct Sun lines, are parallel, look at that. You see how when they're parallel going downward in a slope like that, that shows strength in that downward trend. Would you not agree? I mean, you could just clearly see as they're parallel going down. That's another way to really take one glance as this chart, you know, this tool is called, you know what I mean? You can see that it's a strong trend going downward.
Yes.
Heavy momentum. All right, so that is that one. And then there's a third one, this dotted line here. Okay, this dotted line here, I believe, is the Chinku span. So CHINKOUSPAN, the Chinku span line. All right, and it talks about how the price compares to last month's price. Am I right? The current price, how does it compare to last month's price? Oops, I'm sorry. Can you guys hear me okay?
Yes.
Yes.
Is that right about how this price compares to last month's price?
That is correct. That's correct. 26 periods in the past.
Yes. Okay.
That it shows.
Okay. All right. Very good. So do you guys want to talk about these cool lines that outline the Kumo cloud itself? The Kumo, I think, is this shaded area, and there's a line on the outside, bottom, and top. I can introduce those lines and we can talk about those.
Sure thing. Yeah.
Okay. So if I'm right, the Senkou span, which is SENKOU span A. I'm going to say, don't tell me, let me go to my notes just 1 second. I believe the Senkou span line is this one on top, because in an upward trend, the Senkou span line A will be at the top. I believe that is right. I hope I'm right. Would you guys agree? Senkou span A.
That is correct.
I would agree.
Okay, good deal. And then this is plotted 26 bars into the future. And it is literally taking the Tenkan Sen and Conjunct Sun lines, dividing them by 2. Okay, so that's at the top. And so therefore we have the Senkou span B at the bottom. Same thing. It's a future longer term trend, plotted 26 bars into the future as well. So who has some insight in terms of this futuristic look with this cloud? How does this help us?
Well, compared, okay, so looking at the Senkou span A and B, one is for 26 periods in the future, and another one is 52 periods in the future. And so what makes the cloud so effective, guys, is that you're now having a broad look at indicators that give you the past, give you a present look, and give you a future look. And so by having this three-dimensional look with one glance, you're able to identify immediately where is the trend going, where has the trend been in the past, because we understand that the market will repeat itself. So having that insight to look into the past and see a trail behind it, and then having a trail in the front of it, you're now able to make a very quick analytical decision as far as where the market may go. Of course, there are other factors that may change it, but this gives you, again, the highest probability of success because now you're looking at this from a three-dimensional type time frame.
Wow, that is very good. Very, very good. So I had my notes wrong on that one. Which one is it, the Senku span A or the Senku span B that is at 52 periods into the future? Which one
I
is
believe that is the B.
the B? Okay, yeah, the future longer term trend. Okay, got it. I'm gonna fix that on my notes. Okay, good. All right, so therefore then what we get between the Senku span A and the Senku span B is this thick, cloudy area known as the Kumo area, right?
Yes.
The actual cloud itself. Okay. And the thinner areas of the cloud, I believe, represent the choppy areas. And it's kind of like consolidating here. So if it's thin, it's consolidating, as you can see from the candles below, right? It's thin, and you don't want to make any decisions in a thin area. You want to make key decisions in the cloudy, thicker area. All right. So what I saw was something called a Kumo break. What do we know about this Kumo break when we see a certain trend happening? Say, for example, like this to the downside. What do you guys want to talk about with regard to the breakout?
Well, are you ready to go, Greg? You want to jump in?
Well, I want to just throw something in, and it's more of a, I guess, a question, because I just want to make sure that I'm thinking the right way or thinking along the right lines. So let's say in the area of the Kumo that you have highlighted there, that's the blue section. And I just want to make sure my understanding was, obviously you can see, let's say like the bottom line, how it goes straight for that nice little section of time there. Yeah. In those areas where you see the cloud and there's like a straight line going across, then that's going to be more of a consolidation. Whereas if you start to see it break either up or go down, then that may be somewhat of an indication that, okay, there's going to be some possible trend. And then the other thing was, from my understanding, was that the thinner these sections were, you would probably get better trading times to be in those thinner sections, because if the wider sections, let's say like toward the right side of that blue cloud, those wide sections, typically your movement or the momentum, it has the ability to go all the way up to the top, the A line, or all the way back down to the bottom. So the wider that section of the cloud is, my understanding was you can get a lot of volatility in those areas because it has a wider range to be able to move in those sections. Whereas when it's thinner, like in the little peachy areas or whatever, you have less chance that it's going to, if it's going to stay in between those lines, you have less movement, I guess, capabilities. So chances are it's either going to go up or going to go down by some of the other indicators. So it may potentially be better signals to be able to start thinking about trades.
Okay, I see that. I do have a thought on that. Sean, did you want to take a response to that?
Yeah, I did. And I want to say, Greg, that is a good beginning part of it. It actually, after reviewing it a couple times, it actually is kind of the other way around.
Okay.
The thicker blue part that you see is going to be a sign of more momentum. And so as it comes through and it's fighting through that blue space, that thicker blue space, as you see how we're going from the top let's say in the middle of the blue cloud in front of us from the top, and how it shoots straight down, it's because that momentum is greater coming through there. And so there's two more pieces that we'll talk about, and I guess I'll give a brief over. Of course, there's the TK twist. We'll get into that. I'm sure Tamara will get into that. And then, of course, you have the Kumo twist. Okay, you remember those parts?
Yep.
So just looking at this example, of course, let's look at the candles that are on top of the cloud. And so by looking at the top of the cloud, we see that this is in bullish area. Okay, so that's what they talk about, bullish, because we're in the blue, we're on top. Of course, if it's under the cloud, it's called bearish territory. Okay,
Yes.
and so of course then where the lines cross, okay, and that's intersection with that blue and green cross, okay, that's called a TK twist. TK twist. So that's an indicator. That's one of the indicators to let you know that momentum is starting to change. This is a pivot point that is starting to come down. All right. And so the thing is, depending on where the twist happens, whether it's on top of the cloud, in the middle of the cloud, or down in the bottom under the cloud, will give us the idea of the strength of that turn. Okay, so in other words, on the top of the cloud where it's twisting, it's telling us that, hey, this is going to go for a short. It's going to go for a sell. But here's the problem, that it's in bullish territory. So that signal can be very weak. Okay, if it's in the middle of the cloud, if that twist was to happen in the middle, in the cloud,
Right.
then it'll be a medium strength. Okay. So the probability is getting a little higher, but what we're truly looking for is that twist to happen underneath the cloud. Okay, so it's going to be a bearish move in bearish territory. Okay, and if that happens in the bearish territory, then we can pretty much understand that this is going to gain momentum to go further downward, where this can go down for several, maybe, several hundred pips. All right, so that's a very big indicator right there, is where the twist happens. If it is above or the opposite direction, like here, where it's on top, it's a bearish move, but it's in bullish territory. That's very weak. If it was in the cloud again, it would be a medium strength. And if it's under, if it's a bearish move in bearish territory, then that'll be very strong indicator that this is going to gain momentum. And because the thickness of the cloud, that is telling us that momentum is starting to build. And of course, when we talk in the future here in the video, we'll talk about when do you get in. Optimally, that big red candle that's coming out to the bottom of that blue cloud, you see that right in the middle where your cursor is, that big, that candlestick there. When that comes out of the cloud, this is where we'll begin to look at an entry point.
Yeah.
And this will be in conjunction with the Chikou-sen, that pinkish fuchsia line over there. We also will look to make sure that that breaks the cloud too. And that will be a confirmation when we will jump into this particular trade. So we're really waiting for almost 3 indicators to happen. We're looking for the twist. Where is the twist? Then we're looking, where is the bearish candle? Where is it coming out of the cloud? And then where is the Chikou-sen, the dotted line? When is that coming out of the cloud? Once we see those, this is now an indicator that we can begin to jump in the trade. And a great example that he said is, just think of it like flying an airplane. Okay, if you're on top of the cloud, you're pretty good. If you're in the cloud, it's going to be turbulence. Think of it when you're flying and then you're inside of the clouds. It starts shaking and turbulent and stuff. That's also the same as consolidation. It's bouncing up and down, up and down. And then of course, if we're under the cloud, then you're out of the turbulence. So you want to be able to trade on either on top of the cloud or under the cloud, but not in the cloud.
Wow. That's good. Greg, does that open it up a little bit more for you?
It does. Thank you so much, Sean.
That is so good. Because, too, and so real quick, Sean, when you were saying about the dotted line here, I believe is the Conjunct Sun Line here coming out of the cloud. Were you talking about in this area where it's
correct
that it did come out of there, which shows bearish momentum happening?
Correct.
Okay, good. because I'm also looking at this bottom line here, how it's being used as support.
Support. That's exactly it. So it's breaking that support line.
Boom.
Right. And so when you're looking at that, remember in the videos we were looking at, you'll look at that red bearish candle. And remember, he took a line and went 26 periods backwards.
Yes.
Okay, then it lines up with that Chico Sin line, and it kind of gives us an idea of where it is. So we want to make sure that Chico Sin line, that pink dotted line, guys, that you see here, that we wait till that comes out of the cloud to give us another confirmation that we are gaining momentum for a downward turn. And then you want to jump in only after those two are out of the cloud. So for instance, if we're looking at it and you say, look, the candle is coming out, but the Chico Sin hasn't came out of the cloud, well, then that's not the optimal time. But as soon as that Chico Sin comes out of the cloud, that's the time that you want to jump in. All right.
Good. I have a question on that, because look, and I'm with you. But what's funny is you got some divergence setting up here, it looks like, between these two indicators. So you got the candle breaking out right here, but it looks like this Chico Sin cloud line is coming upward. Should I be not looking at it that way? I should not be looking at it as divergent, should I? Because it looks like it's going upward and that's coming down.
Yes, because in essence, what you're looking at right now, that divergence line underneath that you're referring to has not typically happened yet. Because remember, we're looking at this graph as all of this has happened. But if we were only looking at that one bearish candle right now, the only thing that you would see would be the Chico Sin coming out of the cloud. You wouldn't see all the rest of that. Because remember, it has not happened yet. We're 26 periods ahead of that Chico Sin.
Oh, that's right, because that's in the past.
That's in the past.
Okay, you're so right. You're so right. But the key point to know is just that it's out of there. It's out of there.
Correct.
In bearish territory down here underneath the cloud. That's what
exactly. And so as long as that is underneath the cloud, that shows you that, hey, it's going to stay in momentum underneath the cloud, and all of that is a sell. That is a big long sell right there.
That was a nice one. And again, you got these two parallel lines here going down real tough. That's good. I've heard it said that the Ichimoku cloud is like a swing trading strategy too. Sometimes, these things don't happen quickly, but if you're willing to, wait a couple of days or a few days for them to take root, right, and to pay off, you can wait. And maybe to Greg's earlier point, if you do want to take a stab at one of these thinner sections, I mean, you could. That would be more so scalping, but I mean, you could. Do we agree on that?
Very much so.
Okay.
And so let's talk about that, where you're at, where your cursor is at. If you go back above where that blue is changing into the red, that is what they call the Kumo twist.
Okay.
Remember the Kumo twist? So that is where, of course, momentum is changing. As you see, because the blue is thicker, there was great momentum that it was coming up.
Right.
All right. And of course, if it goes through that cloud, let's say we reversed it and it was going as a buy, and we went from the bottom to the top, that would show us that it was a strong buying trend. When the Kumo twist happens to change direction, it is going to be thinner at that part, and then it'll thicken up down the line. But it has a higher probability that it still could change direction and bust back through the cloud. Pull back up for a buy. Right. So that's kind of what that's signifying there.
Okay, that's excellent. And then you talked before about the twist on the KT, I believe, right here.
TK twist, right? TK twist.
The TK, and that's really, we're just abbreviating the Chico Sin and the Conjunct Sun lines.
Correct.
TK twist. Okay, good. And okay, so that's some of the mechanics of the cloud. Trying to think if we're leaving anything else out on that part, because we talked about all the lines. That's pretty much all there is to this in terms of mechanics. And we heard about the 6 for 6 or 5 for 5 confirmations, right? We talked about where these indicators are, if they're all underneath the cloud. That's definitely, like you said, indications of bearish territory, the breaking of the Kumo. Okay, yeah, these are all key things, what I guess we can call a confluence or things aligning to say, take the trade.
Mm-hmm.
Okay, all right. What else you guys want to talk about? You want to talk about the charting your or planning your exit points with the take profit levels? This part was very interesting to me. I'm going to pause the video here for a second and bring up another screen. Nope.
Okay, guys. So we reached a point where we're here to figure out, using the Ichimoku cloud, how do we determine our take profit points? So in this example that you see, of course, the cloud is over here in the red. It's showing that we're in a downtrend. Obviously here what I did is I switched colors. My Tenkan Sen is red, my Kijin Sen is blue, and then of course my Chico Sen is green. Okay, and I colored it that way obviously because it helps me identify the down EMA, and then the blue, of course, if it crosses over doing a TK twist as I described earlier, then when it goes up I can associate my blue to know that it's going up. All right.
Oh,
so
I got you. Okay.
Yeah. So you can switch those colors, but that's how it is
Yeah.
there. I can recognize that. So now, obviously, we see prices currently here. If we look over to the side, Euro USD, 1.19591, and I say I want to try to figure out my risk to reward, I'll come over here to this tool, our long short position, and obviously this is a short. Of course, I'll come right to that pricing, and boom. Okay,
Yep.
So now I can probably determine where I want to go with this. Here, I can use this top line of the Tenkan Sen right here as my stop loss.
Ooh.
Okay, I could use that. Excuse me, let me.
Because it's like a resistance line.
Oops, yeah, exactly. So make sure I got this. Hold on. All right, let's get rid of that. All right. All right. Oops. Oh, let me try it again. Apologize.
Oh, this is good. So you go over to get the.
Yeah, so I'm using here, guys, if you never really use it, especially on TradingView or whatever, it's the little scale that's on the side. You have your long position to calculate your buys for your risk to reward on how many pips and where your stop loss is. I also use this on the web analyzer too. This is how, if you're using the web analyzer also, you'll want to use this tool also to calculate your stop loss and your take profit on the web analyzer, as well as here on your chart. Again, we hit the short position because we're going for a sell, and as you see, make sure I line it up just so you can give a visual.
Oh, right at the bottom of the candle there. Okay.
Okay. All right. Then I'm going to raise this up to that line there, so you see right here.
Oh.
And then here's the ratio that I'm going to look at. Okay. So if I'm going to do a 50%, I'll go to 0.5. See how this number's changing?
Oh my goodness.
And then I can line it up to let's see, yeah, 45 to boom. That's as close as I'll get. So I could set up a take profit right there. So you see.
What does that mean in price? So
Well, that means I'm losing. I'm going to give up, which really doesn't make a lot of sense, but I'm giving up 79 pips to make 40 pips. Well, obviously that's not going to work there. So let's go ahead and raise that to, if it's a 1-for-1.
No, make it equal.
It's equal. We can do that. All right. If I want to increase that, double that, I'll go to 2.
Which means a 2-to-1?
Correct. All right, so that puts us in the neighborhood.
Yeah, right there.
Right there. Okay. So That means 157 pips. I risk 79 pips to make 157 pips. And according to how the momentum seems to be going, it looks like we can't hit that because we're in a strong, let me shrink that up a little bit.
Oh yeah, definitely.
Strong downtrend.
Yeah, yeah.
That's on a 4 hour. Let's go out, and basically one of the 6 confirmations they talk about is going from your weekly to verify that it's going on a downtrend. Okay, so all right, so it's not. It's on an uptrend here when we look at it. All right, that's on the weekly. I look at the daily. The daily, we're in a down.
Yeah.
Okay. You also kind of see this in the middle, so it may be headed for a possible consolidation. Might be. And then on the 4 hour.
Well, if you back up a little bit on that weekly real quick, I'm sorry, you can see it's predicting in the future that it's going to go back down.
Ah, correct. You are correct. Thank you. Yeah, so
consolidation there. Yeah, but it's going to go back down.
Yeah, so it's going to head back down. So we can take that as a pretty good, fairly decent indicator that's going to continue down its momentum. And then again, we look at the 4 hour, and the 4 hour chart, guys, is basically where you're going to enter on these, or recommended to enter. Now, of course, you can do it on the 1 hour. You can do it on the 15 minute. You can do it at any time frame and use the cloud, but you're eliminating less noise and a little bit more accuracy by getting on the 4 hour and the 1 hour. You definitely can use the 1 hour. Let's see how we're looking on the 1.
Look at that, telling you in advance. I mean,
that's it. We see that pulling up, which is doing, but most likely we're still in a strong downtrend. But optimally you want to look for confirmation on the at least the daily and the 4 hour, or excuse me, the weekly, the daily, and the 4 hour to give you a stronger confirmation. Doesn't mean you can't get in the trade, and doesn't mean you're not going to be the higher probability that you're going to be successful in that short move. But if you can get a confirmation that on the weekly, daily, and 4 hour that it all is going down in a downtrend under the cloud, then your probability of riding that out will be much greater.
Yeah, yeah.
Okay, so that's part of the confirmation he talks about is first on those, the weekly, daily, and 4 hour. We have it on the daily and 4 hour. Weekly is kind of questionable, but I probably would still look at it at least for a few pips. That's the weekly.
Right. And it's almost looking like it's heading into the cloud. I mean, I don't know. But you have 2 out of 3. Go ahead.
Yeah, it's going to be trial and error here, but I pretty much would be pretty certain that looking at this area here, that this is probably going to continue in a sharper downtrend. And this would be a good trade. I would do it.
That's pretty good. I've seen that tool that you just used. I've seen it in the web analyzer when you hit the settings bar, and I just never knew how to use that till just now.
Okay, so yeah, so you'll hit this. Yeah, you'll hit that long or short position. As a matter of fact, you can star it and it'll save in your favorites. See, it pops up over here. And I can star this, and here I go. So I have a long position, short position that's already saved. I also have my horizontal line and my trend line. Also, another thing is you can take your Conjunct Sun line, this green line that's here, guys, and you can actually base your support and resistance lines off that. Okay, so I can look at that and use that also as support and resistance lines for future.
Mm-hmm. So what
And
you took
it
a
will
midpoint? Okay.
respect those lines
Okay.
in the future. Let's go backwards just as an example. Oops, let's clear that. If I were to go backwards, look how it respects the line. Look over here, guys. Look.
Yeah, yeah, broke out right there.
Just by look at the zones.
Yeah,
See, maybe
yeah.
I can raise it. I could probably raise it a little bit,
Wow.
but it's respecting those lines. Oops. And you could use move.
There we go.
Well, it's acting up, but you guys can see what I'm saying. You can actually make your support and resistance lines off of the Conjunct Sun Line here, and actually use it for future trading. And that's also part of the naked trading strategy. Also, if you've ever watched the Daisy Duncan, she talks about naked trading. I actually do that also, where you're going back about a year to 2 years and you're marking your support and resistance lines off of 3 or 4 bounces, and you're doing it off of the daily chart, and then you get in on the 4-hour using these support and resistance lines. So there's a couple strategies, guys, but this Ichimoku cloud kind of takes all that guessing away, because it clearly identifies the trends of where the market is moving to. So let me go ahead and move all that.
And we're trading mainly on the breaks out of the cloud, the Kumo breakout is what we're doing. Is that right?
That is correct.
With proper confluence or agreement with the indicators.
Correct.
As long as everything is in line. And that's not hard. That's not difficult. It's just, it's not.
There you go. Yeah. So that's good, guys. And for those of you who are watching, this is on TradingView. You're able to go ahead on TradingView, which is a free profile that you can set up. And this is how a lot of the IML educators will mark up their charts. And it gives you just a good platform to mark up. You can put notes on here. You could, make notes to yourself. You could put, let's see, trade at TK crossover for sell. And I could put a notation to myself, so when I see it, guys, and I come back to here, this can be a reminder, and it doesn't go away. If I switch the pair, and this is how you'll switch the pairs. You just type up here what you want. Let me see, AUD USD. Okay, this is my previous markups of support and resistance. This is what I did on naked trading, where I marked up support and resistance for the last 3 years. I went back 3 years and marked it, and guess what? The market respects these lines, and I'm able to get in at these markings here. But if I go back, let's see, what were we? Euro USD. You see, my text is still here. I could always leave notes to myself. You can also set alerts over here to the side. I hit the little clock, and I can set it alert that when it gets to a certain, maybe when it gets to my first take profit, I want to get alerted to see if maybe I want to continue in the trade, or maybe I might want to get out or look at another trade. That is TradingView you can use for so many reasons, but it's awesome to use with the cloud, and also on your MetaTrader 4s. As far as who your broker is, you can also use this on the harmonic scanner. You can add the cloud on your harmonic scanner. So you can use it on the IML harmonic scanner also, and be able to get a better feel of if those patterns that it's selecting is going to go in your favor a little bit more with the trend.
Wow, this is good. This is good. Hey, Greg, real quick, and Sean, if you can leave this screen. Take that.
Oh, I took it off. I'm sorry. You wanted it?
I wanted to reference something.
Yes, ma'am.
Just to go back to what we were talking about earlier. And Greg, you were talking about, like, in the cloud, how there is so much volatility inside of the cloud, and how now we can see that we want to wait until we're through right? We've broken through that cloud. I'm back to your question. Does that help? Because
Yes,
you were
it
saying,
does.
okay, good. We don't want to make any decisions while we're in the fog.
Got you.
We want to be free of the fog and trade when yep, that's all the turbulence going on in there. See? And I think that's what you were alluding to earlier. And so we now agree, right, to wait for that breakout.
Yes.
Bottom in that trend. Good. Okay.
Absolutely.
Yep, because I'm seeing it. I'm seeing it real clear now.
So this is that breakout you were talking about. So let's say we saw this. Let's see if we see the crossover somewhere. Let me use my zoom in, and the crossover is somewhere here. Let's see. So
Right.
it looks like right here.
Yep.
If you can see it crossed over. So this is letting us know, remember, as I say, guys, this is in bullish territory. It is a crossover for a bearish move to come down, but it is in bullish territory. So this is a notification that, hey, this is coming, but we don't want to get in over here. We don't want to be in the other person's territory. We want to drop that plane through the clouds and come down into the right airspace, as I probably say.
Yeah.
And so let me kind of back it up. And so once we get through the airspace, you're waiting for this to come out of the cloud. So you pay attention right here to this candle that starts to break out the cloud. But now we go back. Obviously, I can't do that 26 moves back. But if I were to come back 26 moves, this is where it actually is. It's still in the cloud. So what we're going to do is we're going to wait for this green to come out of the cloud. And once it comes out the cloud,
we know it's coming up.
It'll be here. So this is probably the candle that I would end up jumping in. This third red candle, because we confirmed that it's here. Okay. We also had the TK crossover. We waited for it to come out of the cloud. And now look, guys, if we got in over here, we would have caught this with a confirmation. And look at all this we would have caught. And you don't even have to guess about it, because your whole goal is you're going to get in after it breaks the cloud.
Right. And I mean, you can look at it and see that it almost mirrors it as it's going down. I mean, almost spot on.
You know what, Greg? That's so true. It looks just like that indicator.
Now, remember, we don't see what's happening in the future. Excuse me. We don't see this coming yet, but we have a good feeling looking at this Chicken-sen right here that it's still continuing to go down. Now, how do we know, Sean, that it's this time that it may switch? This Chicken-sen will pull back to the cloud, okay, when it's about to turn direction. It's like a magnet. It's going to pull back to the cloud. And so the farther away that it is from these Chicken-sen and Tenkan-sen and was it Kinson line? You know, it's going to pull toward it like a magnet, guys. And so as it starts to come closer, we'll have an idea that it may start changing direction. But for now, this is in a strong downtrend, and this is going to stay here for a while. So this is going to be a good trade to follow for the next few days. Actually, we're on a daily chart here, so you could sit in this probably for the next couple weeks.
And just live it on up. People wait that long for a paycheck at their jobs anyway.
That's correct. That is correct, guys. And then if I go to the 4-hour chart, it still follows. See?
Yeah.
No time is it close to the cloud. When it starts coming close to the cloud, then we kind of know something might be coming. But it has to, not only does it have to break through this secant span A, but then it has to come through to the B, or B and then A. And then if it does, guys, we got time to get out of that trade. And so what we're looking for, if you want to reverse and do a buy, you're looking for this red and blue line, or the Tenkan-sen and Kinsen line to cross. We're looking for that TK crossover, and then we're looking for it to bust through the bottom and get through the top. And when it hits the top part, when the blue candle comes out the top, that's when we will jump in. Once we've confirmed that this green Chicken-sen line has also broke the cloud.
Right.
And then we'll ride it on up for another 300 or 400 pips. So guys, this is just a great indicator tool that, you know, I'm very, very excited about. I really think this is a game changer. And the biggest part that the teachers that were explaining this is, it doesn't matter your skill level. You could be brand spanking new and use this as long as you understand when it crosses over and when to get in and get out. It'll take, you know, a novice trader could use this tomorrow and be very, very successful at trading. And if you're a professional trader, this is just a great confirmation tool to go ahead and help you confirm your trades on the trends and identifying those trends clearly with one glance and one look.
I'm loving it. I got 2 questions, and I don't want to belabor it, and I don't want to hold you guys too long. Number one, look at the far left in that Conjunct line there, the green line there. It is just eerie. It is like eerily scary that it's predicting the actual movements that are to come. The candles have mimicked exactly what it said. Am I looking at that right?
Well, remember, this is 26 periods in the past.
Oh.
Okay? This in the past. That's why it looks like that. So it's repeating that in the past. Okay. It's this line over here in the cloud, which tells us the future. The cloud is future. This line is the past. And so between these two, when you glance at these two, you are correct. Look how it's similar in those patterns. So we're paying attention here because this is primarily where it's going to go. When this starts to change and you start to see that Kumo twist, the Kumo twist is when this red changes and flips over, that's how you know it is about to change.
And we're so far from that right now. Like, that's what you're saying.
Absolutely.
You got a long way to go because those lines are so parallel. They're not even near each other, the span A and B. Oh, gosh.
Now, we are looking at this line. It's possible that this could flatten and face some consolidation, but as a whole, because this is still so far away from the cloud, we're still going to continue in a downward trend. So it will go through some consolidation, but then it will continue on its descent downward.
And then, Sean, if you don't mind, would you mind going back to the 1 hour? I mean, I'm sorry, the day chart, and see where the top of the cloud is, where it kind of like that long period of consolidation. All of that red right there. So, I mean, to me, my guess is if I'm looking at the candles going down as they're following I don't want to mess up the name, but as they're following the green line back, the 26 days ago, as it's following that line, as I'm looking ahead, if this is a day chart, I'm looking at, okay, there's going to be, at least by this, a pretty strong indicator that we're going to have some consolidation that might last, but you can see it's going to drop again pretty strong, like probably in the next, I don't know, I'm trying to read on yours how many days are in that time frame. So like you say, when you can put your little notes, in there, you can, I can see now the, I guess the benefit of being able to take the notes and say, okay, hey, listen, I see this period of consolidation that looks like it's going to happen. But if the period of consolidation on the chart looks like it might be maybe 7 days out, maybe put a note for yourself like 6 days out so that, hey, I'm starting to look for a drop because I saw what the daily looked like it was going to show in the future almost.
Absolutely. Absolutely. I put this yellow line down here because I feel that in this area, it'll probably stay around this line and then continue to drop even more.
You can like set a pricing alert or a call alert.
Absolutely.
At that price to help you look again.
Absolutely. Great stuff, guys. Great stuff.
Okay, one last question.
Yes, please.
We were talking about, you see at the Kumo break right there, that bearish candle broke through. You were saying that you will wait until maybe the third candle. Why would you not get in right when you see that it broke out of the cloud?
You could, but here's the thing. That again, in the cloud, remember that this is a medium strength signal that's happening in this cloud. It's very possible this could act as support and bounce off the bottom of this cloud, and it could reverse on you.
Oh, I see. So what I mean, so at the very bottom underneath, at the break of the Kumo cloud right there, further to the right there, boom. I would not want to get in exactly right there because it could retest that support line and go back up in that cloud.
Absolutely.
So it's good to wait till we're good and out.
Down here, absolutely, it could. still retest down here. It's very possible.
Oh, right, because there's a
I'm waiting to see this, because this, remember, 26 periods in the past, it was still in a cloud where it could have retraced and went back up. But we want to confirm by coming out of the cloud.
Yep.
The cloud is the turbulence. We want to get out of that. So once we're out, we pretty much are pretty certain that, hey, it's probably going to continue our way. Now, true, you can jump out. That could be your trading plan, to jump out and take that. But for the highest success of probability, we want to try to wait till it's at least out of that, out of the cloud.
I'm agreeing with that. I love that. Okay, that is so good. Wow. Thank you, Sean, for walking us through that. That is excellent. Greg, any other questions? Any other points you want to bring up?
No, I'm good. I just, again, yeah, thank you, Sean, and thank you, Tam, for hosting.
Yeah, I'm sorry that I didn't listen to you 4 months ago.
Well, listen, always a student, and I knew you guys were already, in strategies that were working for you.
Yes,
and for me, I'm still new, still brand spanking new in my mind. So I just want to make sure that with what I saw going to the training with Dr. K and some of the folks that were there when she did the 3-day session for the cloud, to me, it just seemed like, okay, I think this is my strategy. So now I'm just kind of trying to soak up everything I can about this strategy. And I feel like it's simple enough, like Sean said, even if you're new, you can have a little bit of success. And I just don't want a little bit of success. So I'm trying to make sure that I really understand it.
absolutely. This is good, guys. Thanks so much. And maybe we'll get back together again, maybe next Sunday for a half an hour or something, just to see how we're doing.
Sure. I'm definitely going to practice in my demo this week and really kind of see how some of this works out, and just make sure that I'm fully understanding the utilization of it, and kind of go from there. So yeah, that'll be awesome.
Great. Awesome, guys. Well, thanks again, and please have a great night.
Thank you. You too, Tam.
Thanks, guys.
Thanks.
Bye-bye.
Good night, Sean.
Yes, sir. Thanks.